Alright, let's dive into something that's been buzzing in the financial world lately. The Clarity Act. Now, before you think this is just another piece of legislation, let me tell you, this could be a game changer for Wall Street and the entire digital asset space. Here's the deal. The Clarity Act, if passed, could unlock the tokenization of trillions of dollars in assets. Yes, trillions. But what does that even mean? And why should you care? Let's break it down. First off, tokenization isn't a new concept. It's essentially taking real-world assets, like stocks, real estate, or commodities, and turning them into digital tokens on a blockchain. Sounds cool, right? But here's the kicker. The lack of regulatory clarity has been holding this back. Wall Street wants in, but without clear rules, it's like trying to build a house on quicksand. The Clarity Act aims to fix that by providing a legal framework, separating oversight between the SEC and CFTC, and defining tokens as either securities or commodities. Personally, I think this is huge because it's not just about crypto, it's about bringing traditional finance into the digital age. What makes this really interesting is the potential scale. Citi Institute predicts that tokenization could grow the real-world asset market from $17 billion to $5.5 trillion by 2030. That's a 32,350% increase. But here's where it gets even more fascinating. This growth isn't just about tech innovation. It's about regulatory certainty. Wall Street's been waiting for this. In my opinion, the Clarity Act could be the catalyst that finally bridges the gap between traditional finance and blockchain technology. Now let's talk about why this matters beyond the numbers. Tokenization isn't just a buzzword. It's about efficiency, accessibility, and democratization. Imagine trading stocks 24/7, settling transactions in seconds, and reducing costs. That's what tokenization promises. But here's the catch. Without clear rules, institutions are hesitant to jump in. The Clarity Act could change that by providing the stability and legal certainty they need. From my perspective, this isn't just about Wall Street. It's about reshaping global finance. One thing that immediately stands out is the role of major players like the DTCC, NYSE, and NASDAQ. These institutions are critical for scaling tokenization beyond experiments. The NYSE, for example, plans to launch a tokenized securities platform in 2026, enabling 24/7 trading with near-instant settlement. What this really suggests is that we're not just talking about a niche market, we're talking about the backbone of global finance going on-chain. That's a seismic shift. But here's the elephant in the room. The Clarity Act's passage is far from guaranteed. Despite making it through the House and 2 Senate committees, it's now facing delays. The odds of it becoming law in 2026 have dropped to 28%. What many people don't realize is that this isn't just a setback for crypto. It's a setback for the entire financial system's evolution. If you take a step back and think about it, this bill isn't just about regulation. It's about creating a durable framework that future administrations can't easily undo. That's why institutions are so keen on it. This raises a deeper question. Why is this so hard to pass? Is it political gridlock, industry lobbying, or just the complexity of the issue? Personally, I think it's a combination of all three. But what's clear is that the stakes are incredibly high. The Clarity Act isn't just another bill. It's a potential turning point for how we think about money, assets, and markets. A detail I find fascinating is how this ties into the broader trend of on-chain finance. Stablecoins, tokenized deposits, and programmable assets are already changing the game. But without regulatory clarity, their potential is capped. The Clarity Act could unlock that potential, creating a settlement layer that earlier tokenization projects lacked. In my opinion, this is where the real innovation lies, not just in the tech, but in how it integrates with existing systems. So where does this leave us? Well, the Clarity Act's passage is still uncertain, but its implications are crystal clear. If it passes, we could see a financial revolution. If it doesn't, we're looking at more of the same: regulatory ambiguity and slow adoption. Personally, I'm hopeful but realistic. This is one of those moments where the future of finance hangs in the balance. Here's my closing thought. Tokenization isn't just about digitizing assets. It's about reimagining how we interact with value itself. The Clarity Act could be the key to unlocking that future. But whether it happens or not, one thing is certain. The financial world is on the brink of a major transformation. The question is, will we take the leap? What do you think? Let me know in the comments below.